When Jim Cramer flips bullish on Bitcoin, your instinct might be to sell everything. So here's the case for why Jim Cramer's recent comments on Bitcoin aren't necessarily a top signal. All right, so Jim Cramer, Mad Money's resident hype man and poster child of the inverse Cramer index, just did a segment on Bitcoin and he was very positive. The crux of his argument was that Bitcoin is what people want to own for their kids as a hedge against $38 trillion in debt. So the guy who once cheered Bitcoin's collapse is now calling it a long-term defensive asset, not to trade, to protect, to hold through what's coming. And yeah, Jim Cramer's track record is mixed. He praised Silicon Valley Bank weeks before it collapsed. He called Coinbase at the IPO, then it proceeded to dump nearly 90%. He wrote off Meta at the bottom, then it proceeded to rally 300%. But here's the twist. Cramer is not always wrong. Actually, he's often right. He was early on Apple, calling it the best stock ever back when it was a niche computer company. He pushed Amazon and said, just own it before it became a $1 trillion empire. He backed Nvidia long before the AI boom. When everyone was laughing at Tesla, he flipped bullish right before the monster rally. During the 2020 COVID crash, he told people not to panic sell and the market ripped. And remember the inverse Cramer ETF? Well, it actually underperformed and shut down in less than a year. So yeah, mocking Jim Cramer is easy, but trading against him might actually cost you. And interestingly, when it comes to his comments on Bitcoin, he's not just talking charts or momentum. He's talking cold storage, custody solutions, JP Morgan lending against crypto collateral. This isn't meme level number go up stuff. This is protect your kids from sovereign debt collapse energy. And that's what makes it interesting. When even the loudest voices of the old system start treating Bitcoin like the new treasury, maybe it's not just noise anymore. Light me up in the comments.